name Nikhil and welcome to our channel. Today, we're going to discuss a topic that's on the minds of many investors. Will the market crash in 2023? The global economy has been on a roller coaster ride over the past couple of years due to the COVID-19 pandemic. The pandemic has created significant disruptions to supply chains, impacted employment, and led to widespread economic uncertainty. In response, governments and central banks around the world have implemented unprecedented monetary and fiscal policies to support their economies. These measures have helped to prop up markets and economies, but they have also led to concerns about inflation and bubbles in certain sectors, such as housing and tech stocks. As a result, many investors are wondering whether the market is due for a correction or even a crash in 2023. One of the main factors that could potentially lead to a market crash is the issue of inflation. Inflation occurs when the general price level of goods and services rises over time. Inflation has been on the rise in recent months due to supply chain issues, labor shortages, and pent-up demand as economies reopen. The U.S. Consumer Price Index, for example, rose by 7% in December 2021, the highest level in nearly 40 years. Inflation can have a significant impact on the stock market. When inflation rises, interest rates typically rise as well. Higher interest rates can lead to higher borrowing costs for companies, which can reduce profits and slow economic growth. In addition, higher interest rates can make bonds more attractive to investors, which can lead to a sell-off in stocks. Another potential factor that could lead to a market crash in 2023 is the ongoing debt crisis. Many countries, including the United States and China, have accumulated significant levels of debt in response to the pandemic. This debt has helped to support their economies, but it has also raised concerns about the long-term sustainability of these policies. In addition to these economic factors, there are also a number of geopolitical risks that could impact the market in 2023. For example, tensions between the United States and China could escalate, leading to a potential trade war or military conflict. Other risks include the ongoing conflict in the Middle East, the potential for a major cyber attack, and the threat of natural disasters. Despite these potential risks, it's worth noting that the market has a long history of recovering from crashes and corrections. In fact, market crashes can often present buying opportunities for investors who are willing to take a long-term view. For example, investors who bought stocks during the financial crisis of 2008 to 2009 were able to realize significant gains over the following decade. In conclusion, while it's impossible to predict the future with certainty, there are a number of economic and geopolitical factors that could potentially lead to a market crash in 2023. However, it's important to remember that the market has a history of recovering from these types of events. As always, it's important for investors to stay informed, diversify their portfolios, and focus on the long term. Thank you for watching, and we'll see you in the next video.